So the Russian currency is now officially crashing versus the US dollar. Part of this view, of course, is based on our strong dollar view to begin with, of course. If you look at its stock market, it's also in what you call bearish trend. So when you have bearish trend, collapsing currency, you get a picture like this. When oil was a little bit more buoyant, the Russian stock market liked that. But again, as we go forward, this would just be one of the many emerging markets that has problems. Some of the biggest losers in the political space and otherwise in the mainstream media will be those who are calling for a sustained 4% GDP level. So we're looking for the first big surprise. For those of you who've been subscribers for a long time, you know that we had the highest forecast for US GDP growth for, I don't know, 5, 6, 7 quarters, almost 2 years now. And this is the first time that we're not only below consensus, but in a meaningful way below consensus. We think that will be bearish, of course, for a lot of the growth exposures that people currently have. The headline CPI number that we're going to get on Friday is going to look quite hot. But again, we want to be going with what Mr. Market's starting to discount. Of course, Mr. Market's been discounting rising inflation for 2 years. Rather than be blind to risk managing things like Tesla, what we do is we short Tesla on short squeezes. We cover it on pullbacks. Same thing in terms of how we trade bonds from a matter of process perspective. On bond yield spikes, we want to buy bonds. On bond yield sell-offs, we want to sell some bonds.